Today I have the pleasure of speaking with Khurram Malik from Jacobs Securities. How are you today?
Very well, thank you. How are you?
I'm very happy to have you here because I have so many questions for you. Right now, I don't know whether to refer to this particular sector as medicinal marijuana, cannabis and hemp. Can you just give us a bit of an overview about what and how this market is currently being referred to by smart, accredited investors?
Certainly. Well, it's the cannabis space in general. In Canada specifically, it's primarily a medical marijuana or medical cannabis space. In the US, on the other hand, there's a very strong recreational side to it. So there we just call it marijuana or cannabis in general.
Okay, and where are we right now? I just spoke to another analyst online and she says, please ask Khurram, what's happening with the licensing process? Because some of us are very confused about what's happening right now here in Canada.
Certainly. Well, the licensing process it's a hard process to get through. So there's a limited amount of licenses out there. Some are really fairly large licenses, some are quite small, but it's been slower than a lot of people expected. There's been a lot of frustration in the market. Recently, a few more licenses have been granted, but we don't expect a significant amount beyond that number to be granted this year, at least as these federal elections are sort of looming. Until that sort of clears itself up, I expect Health Canada to be pretty slow in giving additional licenses. It's very much a scarce commodity.
And of course, I was speaking with a couple of investors yesterday who were saying that their portfolio actually grew over 35% last year because they got involved in this particular sector. Can you tell us what we should expect for this year? Sure.
Well, compared to last year, it got a little over here. There's a lot of speculation. A lot of stocks sort of moved up when they probably shouldn't have. What's happening this year is the sector is becoming more mature and more legitimized in the sense that there's more. You can actually value a company based on its cash flows and commercial prospects instead of some pie in the sky potential. So that for investors now, I think it's time to look at businesses that are sort of getting to a commercial state, getting close to a positive cash flow, and then picking winners, whereas before it was considerably more speculative in nature.
And of course, you've worked at some very prestigious firms. And of course, now you work at Jacobs Securities. And I know a lot of people are very cautious. They don't really know how to take this medicinal marijuana sector. But here you are, a very reputable, financial professional. Can you tell us a little bit more about what got you into this industry and your position on this sector?
Well, it's also one of the reasons I'm at Jacobs Securities. We're a boutique firm, but we're very much a specialist firm. We don't do every sector under the sun. So we pick sectors that are early and immature in nature, get involved in them pretty early, help sort of shape the sectors, not just cover the sectors from a distance. So it's a sector we like to be sector specialists, unique compared to other people in the marketplace, and then sort of grow with it. So it's very much a fast-growing sector, but it's also a fast-maturing sector where the risk isn't quite as high as it was maybe even 4 months ago when investors are looking to invest. They're very legitimate commercial enterprises that you can value like you would any other industry.
Of course, now I'm going to ask you some tough questions, like can you give us some of the top companies that you're currently following?
In its space, certainly. Well, in Canada specifically, there's a few. The early mover in the space is Tweed. They've got one of the largest licenses right now, and they're getting a lot of production out the door now. The question is, can they match that with demand coming in at the same time? Another good one is also a client of ours, incidentally, is Organigram. Just from a valuation standpoint, it seems to be the cheapest in terms of almost every metric you can sort of look at right now. So we think it's somewhat of a decent value play, even though this is a fast-growing sector. Also, the others that are sort of leaders in the space are Metrum and Bedrocan. Again, early movers. They figured out how to move things along, and they're well ahead of the curve compared to a lot of the other licenses out there right now.
And of course, isn't one of your clients Aurora Cannabis?
Yes.
And it's my understanding they built the first facility in Alberta.
Yes, it's the first facility in Alberta. It's a fairly large facility. It's run by a very good team. So they are in a sort of interesting stage of the licensing process. So they've got the license to grow, and now they're going to grow the first crop, and then they're going to have it inspected again. Then they'll get the license to sell, which is the key critical point. So we've got very high expectations of Aurora.
And we've noticed that several companies like Abatis Bioceuticals have been able to secure a substantial amount of equity to invest in this sector. Can you tell us overall, is this something easy for companies in the cannabis sector to do presently to secure these lines of credit, or can you tell us a little bit about the challenges innate with that?
Yeah, Abatis is a unique case. It's secured out of from a U.S. institutional shop. It's the first of its kind here in Canada to get such a line of credit. It is very difficult actually because a lot of the institutional capital in Canada that sort of invested in the space is already invested in the space. So there's a limited amount of dry powder. What we're finding interesting, such as Abatis, is there's a lot of interesting capital coming from the U.S. And the reason it's coming from the U.S. is in Canada we've got a federally legal program. In the U.S. you don't. So from a legal ramification standpoint, these larger sort of buttoned down risk-averse institutions would prefer to invest up here than invest down there where it's very state-specific and it's a little unclear on who a winner could possibly be.
Now, it's my understanding that you have an invitation-only event happening in June, and because of that, I'm not going to mention the date, but what I do want to mention is that this is for accredited investors, for anyone in our audience that resides in Toronto or would like to be in attendance at this event. If you want to send me an email, please do, and we can, send them to you and we can vet these candidates for attending your event?
Yes, it'll be limited spaces, but it's open for institutional investors and accredited investors. And it'll be an event that's sort of targeted towards both the U.S. investors and Canadian investors looking to invest either in Canadian opportunities, but also invest in some interesting European and U.S. opportunities as well.
So can you give us any kind of forecast for what we should expect for the next, say, 2 quarters in this sector?
Yeah, it's interesting. In Canada specifically, for the publicly traded companies, the thing to look for is, are they truly getting their production ramp up? But more importantly, that now that a lot of these companies have figured out how to grow at reasonable scale, can they match it with demand? That's where the key comes in, right? You can grow as much as you want, but if there isn't the demand there to bring it in, that's the tricky part. And a lot of these business plans don't have a very flushed out customer acquisition strategy, where they may have a very good growth strategy. So the ones that can match those two elements up together are going to be the early winners over the next couple of quarters.
Well, Khurram, I can't thank you enough for joining us today.
No problem.